learn the basics, create an account with a Forex broker. Then, once you have created an account with a Forex broker, I would recommend first of all you start with a demo account. What is a demo account? A demo account is a simulation of the real market, okay? Whereby you can first of all practice the different trading strategies that you have learned, and then once now you have confidence, and once you have the confidence and you have the experience, now you can transition to the real account, okay? Also, in addition to that, now apart from learning the basics, learning about market analysis, opening an account with a Forex broker, you also need to understand about risk management, because risk management is what helps you survive the Forex market, and you need to learn about the different risk management strategies. Lastly, maybe towards the end, if you already have a trading strategy, you can kickstart your trading journey. I wish I tell people, if you are starting the Forex journey, or this is your first time you are starting your Forex journey, always start with a small capital. Hata kama maybe uko na $1,000, $10,000, $5,000, I always recommend that you can always start with a small capital. This is because start with a small capital as you gain experience, as you gain confidence, and then now once you have tested that trading strategy with your small capital in a real account and you're able to see results, now you can be able now to even fund your account way big, okay? Another thing is that once, like right now in the Forex market, something that was not there when you're starting out our trading journey, nowadays we have like pro firms, okay? If you have a good trading strategy, or maybe if you are not new in the Forex market, you already have a very good trading strategy, and maybe capital is one that is limiting you, you can always try and try to create an account with a pro firm. Pro firms are basically international companies that are funding Forex traders. So if you have the trading skills and maybe you are struggling with capital, the easiest way you can be able to fund your trading capital is through pro firms. Jackie is asking, the introduce kwa sisi tulimiss Friday. Oh, Jackie, the beautiful lady that was here, her name is Mercy. She's our new admin, and she's the one that she's the beautiful face or the beautiful voice you talk to each and every time you call to our office. So somebody has asked, how do I know it's not a fake breakout? Perfect. That question is very perfect, because as we'll be looking at trend lines, I'm going to show you the entry criteria so that you can be able to know whether that breakout of an area of support, resistance, or trend line is a fake out. Do we have any other question before we start for today's lesson?
Yes. We have a question from Zach.
Yeah.
Which strategy do you use, and which is the simplest one?
Okay.
And then we also have another question. Yeah. Which platform do you use?
So I usually, for me, since I'm a trainer, I've really learned several strategies. But one of the most common trading strategies that I usually use is support, resistance, and trend line. They're usually like the best one. Also, I usually trade the breakouts, as well as sometimes if I find an ICT entry, I usually take the trades. So one thing about the Forex trading is that there is no strategy that is better than another one, okay? What you need to do is that you need to identify a simple strategy that you yourself, you are able to, you understand it the best, and you can execute it over and over. There is a South African trader called Refuen. He said that last year he had a podcast, and he was talking about his trading journey, and he said that the same strategy he was using 11 years ago, that was back in 13 years ago, that was back in 2011, is still the same strategy that he uses until date. And the same setup that he was seeing then is the same setup that usually sees up to date. One thing that I learned from that podcast is that you don't require to have so many strategies. You just need to identify a simple strategy that you yourself understand it the most and execute it. Okay. Somebody had also asked about the trading platform that I usually use. In the Forex market, we have different trading platforms. We have MetaTrader 4. We have MetaTrader 4. We have MetaTrader 5. We have CTrader. We have TradingView. Right now, we also have trading locker, and we have also trading locker. So if you are new in the forex market, I usually recommend that you start with the MetaTrader 4. Okay, MetaTrader 4, first of all, is the oldest trading platform, and its interface is very simple to use. Okay, its features and interface is very simple to use. The difference between this MetaTrader 4 and MetaTrader 5 is that MetaTrader 5, it has some additional features, okay, such that you can be able to close all the trades at the same time, but there is no much big difference between MetaTrader 4 and MetaTrader 5, okay. Also, we have this platform called the CTrader, and you also have the trading view. The trading view, actually, for me, I usually prefer using either MetaTrader 5 or the trading view, but I would recommend, if somebody is new in the forex market, MetaTrader 4 is the best platform that I can recommend somebody to use because of its interface. Okay. Do you have any other question?
Yes. We have quite a number of questions. Keep bringing those questions.
Okay.
We have one question here asking, how important are fundamentals in trading?
That is, wow. How important are the fundamentals? That is a very good question, because fundamentals, the market usually, fundamentals, for those people who are wondering what is fundamentals, fundamentals basically is one of the ways in which forex traders usually analyze the forex market. Okay, in the forex market, we have three ways in which people usually analyze the forex market. We have technical analysis, we have fundamental analysis, and we have sentimental analysis. So for the fundamental analysis, basically is what we call news trading, whereby in these major economies such as like the European countries, the European countries and the America, there are various news and economic data released each and every day. And those news and economic data usually gives us a glimpse of how the economy is faring. Okay. Now, if the economy is faring well, our country's currency will always strengthen against other currencies. If our economy is faring badly, our country's currency will weaken against other currencies. And I have said those news and economic data, they usually gives us a glimpse of how the economy is faring. Okay. Now, how the market reacts when we have those fundamental analysis is that when we have those news and economic data released, is that the market usually reacts by having sudden price fluctuation, whereby in a normal day, the market can move like 70 pips. But when we have like this major news, the market can move like those 70 pips in 1 minute. Okay. Now you see, it is very much important for that person who had asked about how important the fundamentals are. You see, now it is very much important to know when we have those news and economic data being released, so that you don't be in a situation whereby maybe you are already in profit, and all of a sudden the market has reversed and you are in a loss and you don't understand why. Okay. So there is an app called the Forex Factory. There is also an app called the investing.com. Those are the two applications that you can use to be able to see when you have those news and economic data being released each and every day. So, like today, if you go to the Forex Factory, you can be able to see some of the news that will be released today. Like for today, we have a major news. Let me show you. One minute. I show you today. Today at 3:30 we have one of the news that usually moves the forex market. You see, like today on a Friday, we have this employment change, the Canadian employment change, and the Canadian unemployment change. This employment change, basically, it gives us a glimpse of how the economy is faring. Now, for somebody who will be analyzing the market using fundamental analysis, his work will be to take advantage of that sudden price movement, okay? Whereby the market, when we have like today at 3:30, the market will react any currency that has Canadian in it. It can be like USD card JPY, card CHF, or any currency that has the the card currency in it, it will be affected. Okay. Now, for somebody who will be analyzing this fundamental analysis, who will be analyzing this employment change, we'll be looking to take advantage of that sudden price fluctuation. Okay. Now, like for this one of the ways in which one of the easiest way you can be able to analyze this employment change is that this employment change, they give us a glimpse of how the economy is faring. Like in these major economies such as like this Canadian, the government usually compensates those people that are unemployed. Okay. And the government usually compensates those people that are unemployed. Okay. Whereby the government will give you some stipends so that at least you can be able to survive in the during those, so that you can be able to survive in that country. Okay. Now, if the number of those people that are going to ask for that stipend is greater than what is being anticipated in the forex market, we have like the previous and we have the forecast. This is in the forex factory. Okay. Now, assuming last month the previous number of people that went to ask for that stipends is 100,000 Kenya, is 100,000 people, and they forecast that this month they are forecasting that 120,000 people are going to ask for the government to give them that stipends. Okay. Now, this shows that 20,000 people got unemployed, and therefore they are depending on the government. And once now, and now those 20,000 people are depending on the government. That also shows that the economy is faring well because 20,000 people have increased that are more than what was last month. Now for somebody who is analyzing the market using like this employment change, he'll be looking for one of the ways he'll be looking at is he'll be looking for this change, and he'll be looking to take advantage of that sudden price fluctuation, because if this number that is being forecast is more, or if this number is equal to this or is more than the one that is being released, the Canadian dollar will lose its value against the other currencies. So we'll be anticipating any currency that has like Canadian in it, then any currency that has the Canadian in it, like CAD CHF, we have CAD CHF, we have CAD JPY. This it will weaken. So this one, the market will react by having sudden price, the currency will weaken. So the market will react by having sudden price fluctuation, whereby the price will go down. Now for trader, we'll be analyzing this one. We'll be analyzing like this Canadian news. We'll be looking to take advantage of that sudden price fluctuation. Somebody is also asking about where to enter and quit the market. Each and every strategy usually has its entry and exit criteria. Like if you are somebody that usually use like support and resistance, you can use like candlestick, you can use like chart patterns, you can use indicators as your entry criteria. So each and every strategy, it usually has its entry and exit criteria. Okay. So for somebody who is for this person that has asked about how to enter and exit the strategy, you can wait. I'll be showing you about this simple trading strategy, and then I'll be showing you the entries as well as the exit. Okay. This one you can use to make money in it, and the fact that it is very simple, just stay tuned in. Somebody is asking, is it possible to trade commodities on MetaTrader 5? It is possible to trade commodities. It is not possible to, it is possible to trade commodities on MetaTrader 5. It just depends on whether the forex broker you are having is having that commodity that you want to trade. Somebody is also asking the best broker to use. I usually recommend, if you are new to the forex market, choosing a forex broker is equally as important as having a trading strategy. So when you're choosing a forex broker, I usually recommend you can use like Windsor Brokers. We have Xness, we have Hot Forex, we have Paperstone, and we also have IC Markets. Some of the forex brokers that I usually recommend people to open account with. This one is not a paid advert, so I usually recommend those brokers because I have used them and have an account with them, and I have not had any issues with them. And if you are new and you're wondering how does somebody choose a forex broker, it is very simple. Before you choose a forex broker, there are various factors that you need to consider. One of the factors that you need to consider if you want to choose a forex broker If you want to choose a forex broker, one of the factors that you need to consider is the quality of customer service. Okay, you need to choose a forex broker whose customer service maybe is 24 hours. Okay, because you need to choose a forex broker, you need to choose a forex broker who you can be able to access whether it's daytime or whether it's nighttime. So, nowadays the best thing is that nowadays most of the forex brokers, they operate in 24 hours. You can always access their customer service 24 hours. Another thing that you need to consider when you're choosing a forex broker is regulatory compliance. You need to choose a forex broker who is well regulated. And when I say a forex broker is well regulated, you need to choose a forex broker who is well regulated, not only here in our country, but in other jurisdictions. And those jurisdictions are stronger than our countries. Like any forex broker that is regulated maybe in not only here in Africa, like in our country, Kenya, but a forex broker who is regulated also in somewhere like the US, the Australia, the European country, that forex broker is usually one of the best. So you can look for forex broker who's regulatory is well regulated. So, like is regulated by CMA, is regulated by FCA, is also regulated by other regulatory bodies. Okay. Also, when you're choosing a forex broker, you also need to look at spreads. You also need to look at mode of deposit and withdrawal. You also need to look at mode of deposit and withdrawal. Choose a forex broker whose mode of deposit and withdrawal is convenient to use. If a forex broker maybe is using like M-Pesa, and M-Pesa is the most common way of doing the transaction, you can also consider something like that. Choose a forex broker whose mode of deposit and withdrawal is convenient to you. Okay. Also, you need also to look at the trading platform that the broker is having. You need to choose a forex broker whose trading platform you are most convenient with, you are familiar with. Like most of the forex brokers, you find that they're offering MetaTrader 4, they're offering MetaTrader 5, others are offering C traders, others are offering those trade brokers. So choose a forex broker whose trading platform you are familiar with. The last way in which you can be able to choose these are some of the factors you need to consider when you're choosing a forex broker. Now for those brokers that I have like given you, like Exness, IC Market, Pepperstone, Windsor, you can go and check whether they have like the quality of customer service. You can look at where they are regulated and choose one who is not only regulated by CMA. You can also look at the spreads. You can also look at the mode of deposit and withdrawal that they have. You can also look at the trading platforms. Keegan is saying Scale is the best forex broker. I have not used Scale, so I cannot talk much about it, but hopefully I can test their services maybe sometime later. The ones that I've recommended are the ones that I have used and I have accounts with them. Yeah. Somebody is asking about how to use MetaTrader 4 step by step. So that one maybe I can cover it when I be finishing. So today, that one I can cover it when I be finishing how to use the MetaTrader 4 and how to install that MetaTrader 4 either for the laptop, and now you can be able to use those trading features and functionalities. So today I want to show you a very simple trading strategy, and we are going to look at a very simple one. It's a Trendline trading strategy. Okay. So today we are going to look at a Trendline trading strategy. Okay. This one is one of the strategies that you can use. At least this is one of the strategies that you can use to make at least some good and honest an honest living in the forex market. The best thing about this trading strategy is that this strategy is very simple, okay? Because first of all, you note about this trending strategy is a trend following strategy. So, therefore, that means that we will only be trading it when the market is trending, okay? And another thing that I really like about this, one of the things that I really like about this trending strategy is that it allows you to take a high probability trades with pinpoint accuracy. Okay, that's one of the things I really love about this trading strategy, and that's why I chose first of all to teach you about it. If you are new here, if you are not new here, you know that we have been teaching you different trading strategies. We have already shown you about multi-time frame analysis, support, resistance. I've also showed you the 20 pip a day trading strategy. Today, we are going to look at this trading strategy. Next week, we are also going maybe to look at the ICT. Okay, so always stay tuned here. At least, I'm sure by teaching you these trading strategies, you can be able to maybe to identify one that resonates with you, and then now you can decide now to be using it. Okay. Now, this trading strategy is a trend following strategy, okay? Meaning, we only use it when the market is trending. And for each and every strategy that you will encounter there, it usually has some rules that you need to follow before taking a trade, as well as where you need to exit. The best thing about this trading strategy is that the time frame that you use, you can use any time frame. That is one of the things, one of the reasons why I really like this trading strategy. Another thing I really love about this trading strategy is that you can trade any currency. You can trade any currency. Also, in regards to indicators, we don't use any indicators, okay? So when you're using this trading strategy, you can use it on any time frame like the 5, the 15, the 30 minutes, the daily, the weekly time frame. You can trade using any strategy, and we are not going to use any indicators, okay? Now, this trading strategy, it just needs you also to have some basics about support and resistance. And today I'm going to show you those small basics about support and resistance. Now, this trending strategy, first of all, it comes from the word trending market, okay? This trending strategy, it comes from the word trending market, okay? And trending market means that the market is either going up. Trending market, the meaning of trending market is that it means that the market is either going up or the market is either going down. That is now the meaning of this. This is the meaning of trending market, okay? So when you're using this trend line, when you're using this trending strategy, first we'll say that we need to see whether the market is either bullish or bearish. And if the market is bearish, these areas act as our areas of support, and these are the areas that we'll be looking to take advantage of. Okay, and when the market is bearish, these areas are our areas of resistance, and we'll be looking forward to use these areas as our area of interest. Okay. Another thing you should note about this trading strategy, we use any time frame. Lastly, we use this trading strategy. This trend line. Most of the time, the trend line, in all times, the trend line is usually sloping 45 degrees. Okay, this one, if the market, like if this is 90 degrees, the trend line is usually sloping 45 degrees up hivi. Okay, so you need to trade this trend strategy when the market is trending 45 degrees, you know. So you don't want to trade it ila wakati yenye maybe trending iko too sharp hivi. Okay, ama when it is too sharp hivi. Okay, you need to see equally when the market is trending vizuri, inapanda tu vizuri. That's what I mean. Okay, now each and every strategy, how do we draw the trend line? How do we draw this trend line? Okay, one of the things you need to know is that you need a minimum of 2 or more points and connect them with each other. So if the market was bullish like this, you need to identify 2 or more points and connect them with each other. That is the first thing that you need to consider. Okay, you need minimum of 2 or more points and connect them with each other. Okay, another thing you should note about this trading strategy is that we use higher time frame. I usually recommend maybe you can use the trend line using like the 1 hour, the 4 hour, the daily time frame. It is usually like the best, but not to say that you can't use it on lower time frame. It's just that for me, I prefer the 1 hour as my best trading time frame to use, the 1 hour on the 4 hours. This because when I use like on the market usually respect higher time frame than on lower time frame. An area of trend line on the 1 hour, the 4 hour, the daily time frame, the market is likely to respect that area of a trend line, or is likely to respect that trend line than it would on lower time frame such as the 1 minute or the 5 minute time frame. Okay, now another thing we should note about the trading strategy is that the more time this by drawing this trend line, this is another key point. By drawing this trend line here, you anticipate the next impulse move in line with the trends. So what do I mean by drawing a trend line, you anticipate the next impulse move in line with the trend. If I had connected like these points here, if I had connected this point, and this point, okay, and I'd drawn my trend line, by drawing this trend in here, I would be anticipating if the market comes back to this area, the market will come to this area and it will reverse. Okay, if the market was in a downtrend like this, okay, and I had connected maybe these 2 points here, like this point, and this point, and I see the market coming back to this area, I would be anticipating that since the market is in a downtrend, once it comes to this area, it's going to pause then reverse. Okay, another key point when you're using this trading strategy is that we by doing the another key strategy that you need to know, another key point that you need to know when you're doing this trending strategy is that by doing the trend line, we are taking note of the candlestick. Okay, and we'll be taking note of the tail of the candlestick. Okay, a candlestick, it usually looks like this. Okay, whereby this is the body and this one is the tail of the candle. Okay, now when you're using the trend line, we'll be taking advantage of this, the tail of the candlestick. Okay, now if the market was bullish like this, let me first of all use this illustration here. Assuming the market was bullish and I had connected these points here, okay, and now I see the market coming back to this zone here. What will I be looking for? I'll be looking for, if I'm connecting these points here, I'll be looking to connect at the candlestick tail, these points here. Okay, these are the points that I'll be looking to connect so that I can be able to draw a trend line. Are you okay? Do you have any question? Now we are said when using this trend line, we are saying that we're using this trend line when the market is trending. So now, if the market is bearish like this, maybe I'd connected these 2 points like this, okay, and then I see the market come. I'd connected like this point, and this point, and then I see the market come back to this area. I'm supposed first of all to know that this area acts as an area of resistance. Resistance basically is a price level where the market has difficulty rising above. Basically, at that level, the supply is usually higher, so the market usually go down. One of the easiest you can be able to identify an area of resistance is that resistance, it acts as a ceiling. Okay, and you can see here, market came to this point, it was pushed down, came to this point, it was pushed down, came to this point, it was pushed down. So this one is acting as a as a ceiling, So when I see the market coming back to this area, I know there is a high probability that the market is going to reverse at this particular point, and there is a high probability that the market might reverse or it might break, but the highest probability, two things can happen in this area. When the market is coming back to this area, the market can decide to reverse or it can decide to break, okay? So that's why now I usually use the candlestick pattern. I usually use the candlestick as my confirmation that the market is finally likely to reverse, like this area we said is an area of resistance. So I would be looking maybe for bearish engulfing, bearish pin bar. I'd also be looking maybe for an evening star as my confirmation that the market is now finally going downward, okay? If the market was bullish, like this, and then it comes back to this zone here, I know that this area is acting as an area of support, Now, once I know that this area is acting as an area of support, the next thing now I'll be looking for is confirmation of entries, One, if this area, if the market was bullish, these areas act as an area of support, and I usually use like candlestick pattern as my confirmation of where I want to take a particular trade. So in this particular zone here, I'll be looking maybe for bullish engulfing, bullish pin bar, bullish harami, also morning star as my confirmation of where I want to take a particular trade. Now let us look at the real market and show you how you can be able to trade using these trend lines. Okay, remember we are using any time frame, so I'm just going to draw. Let me first of all add my MetaTrader 4. Now, oh wow, here I see you can be able to trade. We can be able to draw a trend line. Kumbuka, you said by drawing a trend line we need a minimum of 2 or more points. In our case here, I can be able to connect maybe this point and this point to draw a trend line. In addition to that, if the market was bullish, like in this example here, the market was bullish. The market here was bullish, and the market has started to come back to this zone, So I can connect this point and this point to draw a trend line. This one is GBP. This one is German index D40. So by let me connect them. I don't know. You can be able to show them. Okay, you can go. Now we have said that we use the trend line on any time frames. I usually prefer the 1 hour time frame as the market can move like 70 to 100 pips within a short period of time, like the 1 minute and the 5 minute. Okay. So if I'm to take note of any high impact news, the first one that I usually take note of is NFP. NFP usually occur on the first week of the first Friday of the month. This one is one of the major news that is usually released. Also, we have CPI, in particular the USD, Consumer Price Index, CPI. We call it the CPI. This one is also one of the news that usually moves the market. We also have FOMC. This one, FOMC, is also one of the news that usually moves the market a lot. We have interest rates. We have GDP. And lastly, we have employment and unemployment rates. We have the employment and unemployment rates, okay? So for me, anytime that, the first thing that I usually do when I come into the office, I usually check to see whether there will be news and economic data released that day that can impact the currency that I'm trading, okay? So assuming like we have CPI and it is for USD, so that shows that any currency that has USD in it will be affected. It can be like Euro, USD, GBP, USD, USD JPY, USD CAD. We have like gold. We have indices. Okay, all this will be affected. Once now I know that we have like CPI, it is for the USD. I know any currency that has USD in it will be affected. So now, and then now I can be able maybe to either trade those news, or I can be able to have some mitigation measures. You know, I can decide maybe since we are having this news, I can maybe decide to stay away, wait for the market to react, and then look for entries. That's one of the ways in which you can mitigation measures. Also, maybe I can decide maybe to reduce my, or to increase my stop loss to factor in those news. Yeah, Mark Egan is also saying that it depends on your strategies and your knowledge. That's true. Yes, Abdi had asked, can news change the direction? Yeah, actually, most of the time, the news can reverse and change the direction, or it can move in line with the direction. So, one of the mitigation measures that you can use is always make sure that you have a stop loss in each and every trade you take. You know, because you don't want to be in a situation whereby you are taking a trade, it had gone like several pips in your favor, and then all of a sudden you are in a loss, and if you are not even put a stop loss, you can incur even a bigger loss. Yes, so the news can change the direction of the market easily, especially these high impact news. They can change the direction easily. If the market was in an uptrend, if the market was like this in an uptrend, it can easily change to a downtrend.
Mr. Mike.
Yeah.
Lynn also wants to know where to put stop loss and take profit. Okay,
for that strategy that I've shown them. Yes. So since I've said that I'm using the candlestick as my confirmation for the trending strategy, assuming the market had come to this point, it has come back to this point, and then at this particular point, maybe I see bullish pin bar. Assuming at this particular point, I see bullish pin bar. So this candlestick will act as my confirmation that the market is finally reversing. So at this particular point, the candlestick that I've seen that those candlesticks that I mentioned, either bullish engulfing, bullish pin bar, bullish Arami, morning star. If the market comes to this area and identify like this point here, bullish pin bar, I will take my buy here, put my stop loss just few pips below that candlestick. Okay. So if this was the row of that candlestick, I will give it a small breathing space, and then now I can target the next high, this point here, as my take profit. Okay. Do we have, let me check. Somebody had asked, is that a trend in market? Yeah. A trend in market usually looks like this. Trend in market means that the market is either moving upward or downward. So this is how trend in market looks like. This one is a bullish market. And this one is a bearish market. So for a bullish market, we'll be looking to take buy trades. For a bearish market, we'll be looking to take sell trade. Remember, these areas are acting as areas of support. These areas are acting as areas of resistance. So we'll be looking to, if you are connected like these points here, and the market comes back to this area, this one will act as my area of resistance. So I'll be waiting for the market to come to this area and it reverse.
Pia kuna mtu hapa anauliza, what if the market drops below our trend line?
So if the market breaks that trend line, basically, that's a very good question. One thing you should note, just because maybe you are drawn a trend line, one thing you should note is that just because you are drawn a trend line, it is not guaranteed that once the market comes to this area, it will reverse. That's why I mentioned those candlestick patterns, because they can act as your confirmation. Okay, because when the market, if you are doing a trend line and the market comes to this area, two things can happen. Okay, the market can reverse, which is the high probability trade to take since the market has been on an uptrend. In addition to that, maybe if the market comes to this area, it can decide to break this area. If the market breaks this area and it breaks with a very good candlestick body, I will know that the market has broken an area of support. Okay, so for me, I'll be looking for, if the market breaks this trend line and it breaks with a very good either bullish candle or for this case is a bearish candle. Now, if the market comes to this area and this one is an area of support and it breaks with a very big bearish candle, that will act as my confirmation that the market has broken this trend line that I had taken. Okay.
Do you have any images for this candlestick pattern?
I don't have the images, but you can just Google bullish engulfing, bullish pair, bullish pin bar, bullish harami, morning star, evening star, bearish engulfing, bearish pin bar. You can kindly Google and you'll be able to see those candlestick patterns. I usually use those candlestick patterns as my confirmation. Tyler is asking, what is candlestick patterns? These are candlestick patterns are basically these the red and the green things that you are seeing here. They are usually like the representation of the market. And this candlestick is a visual representation of the market. And candlestick is one of the ways in which you can be able to view price, because in the Forex market, we can view price in three ways. We can view price either via the candlesticks, we can also view price via line chart, as well as we can also view price via bar chart. This one is a line chart. This is one of the ways in which you can view price. This one here is the bar chart, is also another way of viewing the price. Lastly, we have the candlestick. Candlestick is the most common way of viewing prices. The best thing about it is that you can be able to derive a lot of information just by using the candlesticks. Okay, do we have any other question? Yeah.
What is the optimal time it can take for me to be profitable, and how can I shorten the period?
Okay, so the optimal time, I usually tell people, if you are new in the Forex trading, kindly approach trading as a skill like any other. Just like if you want to run maybe driving, just like if you want to run maybe carpentry, you will approach it as a skill, and depending on how easy you're able to grasp those concepts in regards to the market analysis, the time will vary. Okay, so the optimal time, I usually tell people, you can learn a strategy. Learning a strategy is very simple, but you also need time to practice it. So I usually tell people, if you are new in trading, you can take like 3 months to analyze the market. You can take like 3 months to trade on the demo, so that you can have experience, as well as you can have confidence in those trading strategy. Also, in a demo account, that's where you get the confidence. So I usually tell people, take approach trading as a skill like any other, and usually take for the trading. I usually tell people, the fastest time I've seen people make easy money in trading is around 6 months. If you are trading consistently for 6 months. Okay. So for the optimal time for that you can take maybe to become profitable, approach trading first of all as a skill like any other. Because approach trading as a skill like any other, and then give yourself 3 to 6 months so that you can be able to grasp the concept easily. Some people even take 2 years, some take even more. But the thing is, as long as you are constantly improving yourself, your learning curve will always be shortened. And the best thing, if you have somebody who is mentoring you, he can really shorten your learning curve by a half. And that's why here at Brains with Concept, we usually offer Forex Trading Masterclass, okay? Whereby we usually teach people from beginner to advanced levels of trading, what we call the price action. The mode of learning, if you are interested in our Forex Trading training, if the mode of learning for the Forex Trading training is, first of all, is via our e-learning portal. We are the only school that has an e-learning portal in the country. Secondly, you can learn physically here at our offices. We are located along Thika Road, Spar Mall, second floor, S47. The last way in which you can be able to run the Forex trading is in the event maybe you are not able to come here for the physical classes, you can have the Forex trading via Zoom sessions with the trainer. The course goes for 4 to 5 weeks running for, the course goes for 4 to 5 weeks running 4 hours a day, and that is the estimated duration of time, and the training goes for 30,000 Kenya shillings. Here at Brains with Concept, we not only teach you about the Forex trading, we also offer online training as well as crypto trading training. I'm sure our admin will talk more about our services in a few. Yeah, John, anasema I'm here in Kimbo. Yeah, kindly pay us a visit. We are open from Mondays to Fridays from 9 to 5 p.m. Also on Saturdays from 9 to 1 p.m.